Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hi everyone, this is Trang. Welcome to Investips. Today's topic is all about private assets. What are they? What are the key characteristics? And how can they help with your overall investment over the long term? Private assets simply refer to assets that are not traded on a public exchange. They are investment into companies that are privately held. Over the past few years, private assets have become more popular as investors are seeking for different ways to diversify their portfolio and to generate high returns. Now, there are many categories within private assets. In today's podcast, we will focus on private equities, private debt, and private real estate. Private equities is investment typically managed by private equity firms. These firms usually invest in two types of companies: promising companies poised for growth and expansion, or companies in need for repair. Let's take some example. For the promising enterprise, think of an innovative software company. It has a bright future, but it still has relatively small customer base. It needs capital to grow, the right strategies, and more experienced manager to get to the next level. Now, the company in trouble, think of a local factory that has been shedding jobs for years. It is falling behind its competitors, and it is struggling with rising energy costs. The factory still makes great products, but it needs a change in strategy and capital infusion to compete. So the goal for private equity firms is to improve the company they buy over time and sell them at a profit, generating good investment return. Historically, private equity has been able to deliver high return compared with public equity. They are also less affected by regular market cycle and other factors because they are held privately. For this reason, we believe that it makes sense for investors to consider private equity as a substitute for some traditional equity exposure. Now, how about private debt? Private debt refers to debt accumulated by private businesses. When a private company takes out a business loan, or when an entrepreneur borrows money from a financing company, they are all examples of private debt. We believe that there is a case for private debt in an investment portfolio because compared with traditional high-yield bonds, private debt can provide higher level of income as compensation for extra risk of lower trading frequency and more intensive monitoring. The third type of private asset is private real estate, which refer to private investment focused on property sector. Private real estate not only can provide stable stream of income generated from regular cash flow, but also provide opportunity to grow in value when property prices go up. With inflation remain a risk, private real estate present an excellent option for investors to get protection against inflation. Now, at this point, you might think, why private assets seem to have all the good benefit over public asset? What am I missing? It is true that the superior performance of private asset does come with certain risk. The first of many risks is illiquidity risk. What it means is that you cannot just go online, buy and sell private asset anytime. It's usually done through a third-party institution. And once committed, your money is likely to be locked in for a couple of years. So it is important for you to consider the duration of private asset investment within the timeline of your overall financial plan. Now, the second risk is information about private companies are not easy to access, not to mention in private markets. There is a great complexity behind investment strategies. That means that extra time and effort investors need to put in to fully understand what they are investing. So is private asset right for you and your investment portfolio? That can be a topic for you to discuss the next time you sit down with your relationship managers. In the next episode of Investip, we will go back to the basic, discussing about diversification and different ways to diversify the portfolio. So do like and subscribe for more information. Thank you for listening in.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.